Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Good evening and welcome to another edition of Business and Financial Raw Talk. I am LaWanna Bradford, Chief Operating Officer of the Bradford Group and Principal of the Bradford Group Consulting. And I'm so excited because I have not only a friend, but an amazing financial expert and leader here with me tonight, Mr. Regis Humphrey.
Hello. How you doing?
I'm doing well. Thank you. I'm so glad.
Thank you so much for having me tonight. Thank you. It's a pleasure. I'm truly honored.
Well, tonight we are going to be talking about credit. Someone is watching you. And for those of you who may be tuning in for the very first time to Business and Financial Raw Talk, you're wondering, well, what is it about this raw thing? Well, I promise you, we are going to get raw. We're going to push the needle. We're going to challenge you and whatever paradigms you may have, systems and processes. And we may agree, we may disagree, but it's all about no holds barred. And we promise you, you're going to walk away with some some nuggets. So I want to tell you a little bit about Regis. I've known Regis now for, I think, almost 20 years. Can't believe it's been that long.
I know.
So much has changed. But
yes.
Regis is, he's just phenomenal. He is a former world-class track and field athlete. He is an entrepreneur, a coach, a financial leader. He has over 17 years of experience in the banking industry, where he has worked as a senior underwriter with mortgage loans on all spectrums. But the one thing that I love about Regis is his passion to help people level up their awareness in their financial game so that they can begin to build generational wealth. We hear about generational wealth all the time, but success leaves clues. And as a wealth coach, Regis has a roadmap of how to get there. And one of the things that he believes is so critical is understanding credit, because he believes that it is the cornerstone to building wealth.
Exactly.
So
yes.
Why do you believe it is that cornerstone?
Well, in this country, first of all, before you're able to do anything, you have to know first of all, what's coming in versus what's going out. So I help people to establish a budget. Once we do that, then credit plays such an important factor in this country. One, if you have bad credit, it costs you it could cost you your employment. It could cost higher in interest rates as far as insurance, car insurance, home insurance, renter's insurance, credit cards. And of course, the main thing which I deal with on a day-to-day basis is getting a home loan or starting a business. Credit plays an important part in all of that.
When you said that, the important part. Hopefully people aren't hearing this feed I'm hearing. It sounds like I'm growling, but we'll keep on.
You're not.
Is understanding how critical credit is. I mean, when we think about how it has, I guess, morphed over time to where now a friend of mine was denied a position. She's an executive, but hit, financial hardships. And she had passed all the interviews, was going through the final verification. And they said, I'm sorry, you are our number one candidate, but because your credit score is below X, we can't offer you the position.
Same thing happened to me, LaWanna. Because of the pandemic, I had to go back into the workforce. And I've been in the workforce, you said 17, it's actually going on 21 years now. But in the 21 years that I've been there, they only pulled credit to see if you had dealt with fraud. That was it. So they would do a what they call a soft pull, not looking at your credit scores, not looking at your debt, but just looking at a soft pull, looking at date of birth, social security numbers, and if you had any other IDs. That was back in the industry. When I first got back in, I got 2 offers and they pulled my credit. And I'm going to tell you exactly what they told me. The first company told me, I'm sorry, but you're over $30,000 in debt and you're a liability. And so for that point, we're going to have to pass.
Wow.
I couldn't.
So
I was
you're looking
devastated.
at not just the credit score, but they were
Yes.
looking at your amount of
Of
obligations.
debt, of obligation. Yeah. And my debt to income ratio. Exactly. And it was shocking to me. But again, that's America. Soon as we understand the game, they change it on us. And so what we have to do and what's important for us is to knowledge is power. And so for me, being in the industry for 21 years, I've seen so many credit reports. And one of the things that's so interesting is because of biases, we no longer, when we have pictures, the pictures are blacked out because they don't want us as an underwriter to be biased towards people of color, indigenous, or even Caucasians. So the pictures are actually blocked out. However, we do capture the information most of the time on the 1003. And so I'll look at credit reports first before I go to my application. And 9 times out of 10, I can always tell based on the credit report what ethnicity or about 80%, I'm correct, of what ethnicity by what I'm seeing on the credit report. So it's really interesting. And the credit report does tell a very interesting story about our lives.
Let's move into that because that's really interesting. Like you said, you have this. I mean, you looked at tens of thousands of credit reports,
Yes.
in your career, and it leaves clues. There's trends, there's indicators there, and as you said, you're able to look at the credit report, not look at the demographics that's on the application, and be pretty close to what population you're looking at. So can
Yes.
you give us an idea of what some of those trends look like for African Americans compared to Caucasians? Because we know, especially since you're talking about generational wealth and how that's so important to you, for 170,000 net worth that Caucasians have, African Americans are $17,500.
Yes.
So 170,000 to 17,500. So let's talk about it from that credit lens. What are you seeing?
Well, there's two things that I see consistently in my profession. One, I would say up front, we don't see enough people of color coming through. So that's number one. We need to have more people of color purchasing homes and getting into the process. That's number one. Number two, it's always, I can tell by the interest rate. For some reason, and I think there's two really big things to this. One, we're uneducated. We don't have the knowledge about buying a home and what we should anticipate. And then two, most of the time, and again, I'm not going to generalize all people, but most of the time, what I see is people of color or minorities have a low credit score. And that low credit score immediately affects that interest rate. Period. I'll give you an example. I have somebody with a 95% LTV, which is the loan to value, with a 700 credit score or 680 or plus. They're looking at paying 2.99 to maybe 3% on a 30-year fixed, or a 20-year, we can go even lower. Take that exact same profile. Everything's the exact same, making the exact same money, but now they're at a 650. Guess what that interest rate is going up to?
What do we have?
Almost 4.5. And again, depending on the knowledge of the person and how experienced you are in negotiating, you might think, oh, I'm great. I'm going to take that. That's low. And where other people, again, because of their credit score, are paying 2 to 3 points lower in interest. That's saving you thousands of dollars on a 30-year fixed.
Yeah. And the other thing is, when you think about credit, going back to, it determines where you may be employed. It can also dictate where you live.
Yes.
Right. So credit, if it's managed properly, buys you options.
It opens doors is what I tell people. So when somebody comes to me and they say, you know what, I want to buy a house, my first thing I ask them is, what is a budget? What's your budget? How much disposable income do you have? And how much house can you afford? I don't know. I just want to buy a house. And then when we start digging into them, then I ask them the next thing, oh, what's your credit? Oh, my credit's bad. And a lot of people, their credit isn't bad. They just don't understand how credit works and how to make it right. And so the challenges that I try to get people is that if you're, again, you can get a house at a 580, you can get a house at a 620, but you have more options if you're at a 640 to a 660 to a 680. When you're at a 720, just thinking this, you have one door open at a 680. I mean, at a 580. At a 720, you have about 100 doors open up that you can open up. That's the difference. That it just gives you a lot more options of what you can and cannot do, especially in the mortgages, especially with the biggest investment we're going to purchase. I mean, we're talking about hundreds of thousands of dollars. Well, besides student loans.
Right, exactly. And the one thing for those that are listening, I'm here with Regis Humphrey, and we are here talking about credit. Someone is watching you, and both Regis and I will be trainers at our upcoming financial wellness boot camp on November 6th. I'll be coming from the mortgage side, but as different lens about how you can 10x your savings if you know some critical pieces of information regarding your mortgage. And Regis is going to be giving that broader picture with credit as it relates to understanding what it may prevent you from doing, the doors it may open for you, but also how it is that cornerstone to generational wealth. And Regis, I want to just get back to this discussion about the disparities that we have between ethnic groups and your the majority, if you will. And what I found, and I just like to get your take on it, and we'll use the 2007-2008 mortgage crisis.
Okay.
Everyone was affected, to pretty much. Either you were upside down or something happened. But the thing is, African Americans were already we're trying to catch up, right? But then that put us back even further. Now we're hit, and we're still not caught up. We still haven't regained what was lost. Now that's exacerbated with the pandemic. Now I'm going to add another layer. Women. Of all ethnic groups, all races, but then also looking at the minority populations, where when we talk about the pay disparity, the pay inequity, we hear the overall women earn 80 cents on the dollar. That's women overall. But when you look at African American women, they earn 64 cents on the dollar that every white man earns. And Hispanic women, 50 cents on the dollar.
Wow.
So for us, for African Americans to get pay parity, we're looking at 120 years. I don't know about the listening audience out there. If you have 120 years to wait for
that's information I didn't know. Wow.
Yeah, or are you going to take ownership and see what can you do to navigate and control your finances? And I believe that's what, again, credit, we think, oh, well, it's a big thing, but not so big. And people tend not to think about it, Regis, until they ready to purchase, right?
Right. Or so if you're looking at getting a student loan, credit. If you're looking at getting car insurance, credit. If you're looking at getting a home loan, credit. If you're looking at getting renter's insurance, credit. Car insurance, credit. Now employment, credit. So there's 7 different things that credit affects just right there. And what's important that I want to share is that it's just knowledge. It's not rocket science. It's not only me having the 21 years, but it's also me making the same mistakes that every other minority made, chasing what we call this American dream, and not understanding how to put a budget in place, how to save, how to methodically build generational wealth. We talk about it all the time, but we don't know what the actual steps are. And so my whole program is all about that first, and I like how you put it, it's the cornerstone of building generational wealth. So it's just dealing with the first building block and dealing with that. And so I want to put out a little things like this. Can you have a bankruptcy and have a 700 plus credit score?
Yes.
A lot of people don't know that. A lot of people don't understand that the bankruptcy isn't the problem. It's what you do after the bankruptcy. That's the issue. And And I see a lot that's one of the things that I see a lot of people that don't take advantage of. And so when I first started in this industry, I was like, wow, as an underwriter, I would see somebody with a BK. How did they get a 720? What? How's, and so it was very interesting to me. So those are types of things that we're going to deal at the workshop. We're going to deal into, collections and how to build your credit, what makes up your credit score. And how do you get a credit score? How can you file bankruptcy in 1 year and in the next year have a 700 credit score? Is that possible to do it the legal way? Everything we're talking about,
the legal way,
the legal way and above board. So this is all above board. This is all by the rules and regulations that are set by the FDIC that manages credit and people that offer credit. And so everything that I do is all about helping people to be able to, again, buy a home, start a business, build generational wealth from that cornerstone. And it starts with knowing your credit.
The one, and I know your niche audience started off with those in the entertainment industry.
Yeah.
But now you're expanding. You want to touch not just the elite, right? You want to touch everyone else. But what challenges? Because sometimes we look at those in the entertainment industry and we're like, oh, they got it made. Look at all the money they're making. But you're seeing that they have just as many hiccups as someone doing the regular 9 to 5.
Actually, they have more. The people that I'm working with are young entrepreneurs that are in the entertainment industry and they're getting started, or they've been in it a minute, but they're not a superstar. They're not what they call an A-list celebrity. I'm talking about dancers, choreographers, stunt people, people who are struggling actors that want to understand. And so what I found in being in the entertainment industry, I would see young people go through and spend 10, 15 years at their craft. And then when they get done, they don't have anything to show for it. And then they have to go back into the real world. And so, again, they're making 50, 60, 100, maybe $180,000, maybe $200,000 a year. That's the generation that I'm dealing with and the people. So it's not the superstars. But again, these are all people that are self-employed. So that's their gross income, their net income when you start paying taxes, when you start, other issues, again, that we don't have as a W-2. We have taxes that we take out. We have a 401k that we can participate in. Well, as an entrepreneur, especially as a self-employed, you don't have those things. You don't, your employer pays into Social Security and unemployment. Well, if you're not doing your taxes correctly, you're not paying into those things. So when you get to a point where you need those things and you need to rely on those social nets, they're not there for those young people. And so my program is helping them to navigate that and helping them to build a portfolio so that they do fall on hard times, then they have the same safety nets that you and I had by working for a W-2 or an employer.
I love that. And even, in the W-2 space, the safety net isn't like what our parents experience, right?
Oh, no, not at all.
But it is. The risk is not as great as when you are self-employed and being able to manage what you have.
Yes.
To build that generational wealth. I mean, it requires some commitment, planning, focus. Like you
say
said,
that again. Focus, discipline. Yes, that's it. It's focus, discipline, focus, and then more discipline.
Did you hear that, ladies? Focus, discipline, focus, then more discipline.
It is. It's not rocket scientist. So I'm, and I'm going to say this live on Facebook. I will be a multimillionaire. Now I have an 8-year plan. I'm done with year 1. And so within the next 8 years, I will be a multimillionaire. There's no doubt in my mind. No doubt.
And that's what I love, Regis, because you and I, we know what it's like to make a lot, to lose a lot, and to rebuild. And success leaves clues. And the financial game, it's a puzzle. But when you understand how the pieces fit, you can set the timeline and your trajectory for when you're going to hit certain milestones. Like you said, you have this knowing that it will be. Why? Because you're doing the work. You've set up the plan. You're not waving this magic wand and saying hocus pocus and hoping that things will happen. But I find so many people are spinning their wheels, dreaming without the action.
Yes.
Dreaming without surrounding themselves with people who have the expertise to guide them. Because one of the things I talk about is you should have your financial team of experts around you. Don't go to Google University and bank your financial future on your interpretation of what Google may say, because it could you could end up in jail. You could end up owing back taxes. I mean, you just never know what could happen because you're trying to be, as Benjamin Franklin said, penny wise and pound foolish.
Hey, did that, been there, done that, learned the hard way. So yes, a lot of the things that I've experienced and it's so sad because I actually know this information. And it wasn't until the last year and a half that I actually started applying what I've been trying to teach everybody else. So but again, when you get to a certain place in your life, and when you're just tired. And so for me, what the reality was, I don't want to work for anybody anymore. I want rollover money. What does that mean? Mean that when the alarm clock goes over, I want to roll over and still make $120,000 a year, whether I get out of bed or not, whether I answer the phone or not, whether I put on any clothes. I can stay in bed or on vacation and still be making $120,000 a year. That's what I want to be doing. And so it just started to the point where, like, you know what? I'm tired of hitting a 9 to 5. I'm tired of working for other people. I need to put my money to work for me.
And that's so important. I mean, generational wealth, we're not saying that you have to be an entrepreneur to do it. I mean, my parents did it and they were employees their entire life. But again, you said something so critical, Regis. Knowing how money works and having it work for you. It is a vehicle. But if we sit and we hold it and we hoard it and we don't send it off to do things with, then we're not going to see the return.
Well, what works 24 hours a day, 7 days a week, 365 days a year? Can you do that?
No.
Money. Money works 24/7. You don't have to say, I love it. You don't have to feed it. You just have to be smart.
You know, we had a money mindset coach last year in last year's boot camp. Her name's Eleni Anastos. And she talks about your relationship with money. She always says, you need to have a date with your money. So she has a set time, I guess, every month. It's like date night where she's looking and saying, okay, what is it that I have? And what do you need to do for me?
Amen. Well, think about like this. You and I are a slave. What does that mean? I know that's a really bad term to use, but slave means that you have to attend to somebody else to get something else. Okay. What I've learned, and a book that I actually learned a lot of the philosophies that I teach is from The Richest Man of Babylon by George C. Claxton. And again, it's an amazing book. But one of the things that it teaches you is about money. And like you said, you are perfect, LaWanna. You don't have to make $100,000 to be a multimillionaire and rich. You don't. As long as you're smart with your money and you learn how to make your money use it. So that book teaches you that we're a slave, and what you want to do is enslave your money, meaning your money is working for you instead of you working for your money. That's what I mean by when I use the word slave. And so The Richest Man of Babylon teaches that if you have 10 generations of revenue, meaning different revenue streams outside yourself, now you have the option of being able to build generational wealth. For me, that's a lot. That's a whole generational 10 revenue streams. So what I want to teach people is that, you know what? You can save money if you have better credit score. So instead of paying higher interest rates, you can take that money and put it to work for you. Instead of paying higher interest, higher car insurance, take that money and put it work for you. Instead of paying high in mortgage interest, again, imagine if you saved $4,000 a year and you were able to put it into a vehicle that was working for you and making you money while you was working. You can do that by just lowering your interest rate from a 3% from a 4% to a 2.9%, or from a 5% to a 2.9%.
And I like what you're saying there, Regis, because one of the things that I hear from women a lot is, first of all, women don't like talking about money. And we have a video that we've shown. It was actually last year news release, and this is something happening globally. It's a global phenomenon that women would rather talk about death than they would money, which is unfortunate.
That is.
And so, ladies, for those that are listening, please start talking about your finances, because number one, we earn less when we're compared to, on average, when we compare to a man. We live longer. We are going to be more apt to be alone, meaning the sole provider for our families due to choice, divorce, or death. And the cost of living and medical insurance is increasing. So if we don't do the work today, our future self is going to look back on us saying, you didn't love me enough to take care of me.
You know, one other trend that I noticed is women are they're the breadwinners. A lot of the women that I see that are submitting, and again, what I'm saying is, we have two different echelon. We have the upper echelon, which I consider 680 and higher, but the lower, normally those are minority women that are coming in and purchasing homes. And again, I'm not saying that there's not men that are doing that, but in the 21 years that I've been doing this, I've saw a lot more women who are the breadwinners, who are single family mothers, who are coming in and purchasing homes than are the men.
You know, the other thing, stat that I saw that was actually quite disturbing is, like you said, women are, they're purchasing homes, but when a woman is either widowed or divorced, do you know there's a 50% chance or greater that she will not be able to sustain that home?
I didn't know that. I've seen that.
So again, and then this is why I think it's so important for those of us who are in the financial industry, who have a heart for women and helping women level up their game. I believe we have a moral and a fiduciary responsibility to have conversations like we're having, Regis, just to create that aha moment that then you're not trying to figure it out yourself, ladies, but you get with people like, if you want some mortgage advice, there's me. If you want mortgage and credit advice from an underwriting standpoint, like how that loan is going to get cleared, you talk to a Regis. If you want someone who's going to help you with insurance, we're again at the boot camp. We're going to have these individuals who are resources.
Yes.
Again, it's just you want to build your team, because you can go fast alone, but you can go farther together.
Amen.
And I know that I was able to rebuild because our mutual friend Rick, and just he came through a financial hardship in those lessons. When 2007, 2008 hit Regis, I'm like, what do I do? He's like, follow this blueprint. I need you to do A. I need you to do B. I need you to do C. And, I was resistant because there's some pride I had to swallow.
Well, you just know recently, I borrowed money. The pandemic destroyed our business.
You had your smoothie business.
Right. So I left corporate America. Well, not left, but corporate America left me, and I wasn't going back. And the pandemic changed that. And it's so sad because our location, one of our locations is downtown. And there are a lot of businesses that have permanently closed and not reopened. I know of at least 4 in our mall that have permanently closed. And again, just like the housing crisis, just like global warming or man-made climate change, the pandemic has hit people of color a lot harder than it did our majority. So, So yes, knowledge, helping, support is very, very important, extremely important.
Well, Regis, can you believe we're already out of time? I want to take myself down just so you can leave a few words with our listening audience, and then I'll pop back up, okay?
I appreciate that. Well, thank you so much for having me, LaWanna. It's been an honor and true privilege to be a part of this. All my information is just about knowledge and giving people the information so that they can make the right decisions for their lives. The cornerstone in building generational wealth starts with understanding a budget, your credit, and your finances. And that's what I'm here to help you with, is building that first cornerstone in building generational wealth. Thank you, and I look forward to seeing you at the boot camp in November 6th.
Yay, this is going to be great. And I'm gonna play a little video before we sign off. Is that okay, Regis?
That works for me. Thanks again.
All right. Well, we want to encourage our viewers to come out to this boot camp. Ladies, so much has changed in the last 18 months globally. Every industry has been impacted, and the financial industry is no different. In fact, one of the things we didn't talk about, but Regis may dig into it a little bit at the boot camp, is the new FICO score model, the new credit score model called FICO 10. Yes, there's going to be a new way they're going to compute your score. So you may be happy with the change. You may be unhappy with the change, but just know that that is underway. And please register for the Financial Wellness Boot Camp November 6th. It's our third year, which speaks to the success that we've had. Enter discount code CELEBRATE. And guess what? You get your ticket for only $20. Only $20. And
please share with others.
Yes. Share. Very, very important.
Yes.
Don't keep it to yourself. And we promise you're going to walk away with, if only one nugget, that nugget is going to change the trajectory of your finances. I guarantee it.
Amen.
So Regis, thank you so much for joining me. And I look forward to seeing you on November 6th, if not sooner.
Thank you, LaWanna. It's been a pleasure.
Thank you, everyone. And as always, remember to keep your vision ever in front of you. And remember that when your vision intersects with opportunity, success is inevitable. Until next week, be blessed, stay safe.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.